Inflation has persistently risen through the course of the second half of last year. Retail inflation surged past the tolerance band of India's Monetary Policy Committee, and this was largely led by food prices. Inflation rose to 7.35% in December from 5.54% just a month earlier. This was according to data from the Statistics Ministry that was released on Monday. And this was even higher than forecasted. A Bloomberg poll of 37 economists had estimated inflation at 6.7% for December. At these levels, inflation is at its highest since July 2014. Inflation in food and beverages rose to 12.2% from 8.5% in November. Vegetable prices surged to 60.5% in December from a rise of about 40% in November. Onion prices rose by over 300% from over a year ago and remained the biggest pain point in the food category. But other food items have also seen higher inflation from the previous month. The other big jump has come from transport and communication, which rose to 4.8% in December from just a percent in November. This was because of the telecom tariff hikes across service providers. Higher telecom costs were also a key contributor to core inflation, which rose to 3.75% in December from 3.5% in November. Core inflation excludes food and fuel prices. Most other components which made up core inflation actually de-accelerated in December. Higher inflation comes at a time of very weak economic growth and leaves the MPC in a dilemma. So even while lower growth may require more rate cuts, inflation above the MPC's target may demand an end to the rate cutting cycle. Sonal Verma and Oradeep Nandi, India economists at Nomura, have said that though they expect these supply-side pressures to subside by the quarter ended June, with GDP growth expected to remain sub 5% according to their estimates for the current financial year, the next quarter is likely to witness stagflation-like conditions.